Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. A little bit of an error there, but 20th of October, 2025. Yeah, so stocks rebounded on Friday night, basically on the back of Trump yet again softening his stance on trade negotiations with China. And so yet again, another taco going on there. As you can see here, the Asian session, we really did have weakness because there was still that really, I guess, hard stance on China, and Scott Bessent, particularly, as well as Trump, were throwing out a few insults here and there, etc. And we did start the US session with the market fairly soft, but essentially we bounced back around about 0.5% in most of these guys on the back of basically that softening stance. You signal a softer trade stance. Basically, he wants to do a deal. There's been a few comments that have come out over the course of the weekend as well. So whilst that whole thing rattled markets, it just looks like yet another delay to the tariffs on November 1. I mean, look, I don't think anyone really necessarily believed they were going to get a trade deal done. These things take years. It just sort of goes to show that the market's on a little bit on tender hooks here as it stands, and obviously those bank results as well, and the worsening credits from some of those regional banks did battle some. Although we did have Fifth Third Bancorp Regions Truist report fairly solid profits from the regional banks on healthy loan growth and fee income. That did sort of start to allay a few fears in terms of whether these bad loans were systemic or whether they were just largely one-offs. We see obviously the regional banking system here. These would be these smaller ones here, just started to drift a little bit higher, and that whole banking sector just sort of headed a little bit higher as well. There were fears around Oracle's ability to get the job done on a few of all these deals that's going on at the moment. So we just drifted off basically as analysts started to question whether they're going to execute. It was a pretty significant rally, I must say. It was around about 40-odd%. I think AMD, personally as well, is at very big risk of having this same analyst reaction at some stage. It busted up pretty much 45% in the last, probably say 3 to 4 weeks. And this was this circular deals with OpenAI, NVIDIA, etc., where basically they would invest in OpenAI and then they would use their services, and these multiples were being used over more than one company basically. And one of the big things as well. I mean, this is the only gold stock, but it's down here, Newmont. The gold and precious metals really got hit on Friday, and basically those trade tensions easing, and Trump not being so heavy on those, the gold miners would have been smacked up, or the gold mining ETF, etc., would have been like GDX would have been smacked up pretty badly. With Newmont down 7.6, but I've got to say Newmont was on an absolute tear. I mean, we had these things on around the around the $45 mark, probably not much longer than 18 months ago. Trading at $150 now. It's a pretty impressive rally, and it's either the best performing stock in the S&P 500 or the second best this year. So you do expect these sorts of things to drift off a little bit and basically take a few breathers. I mean, we've all seen the lines and on social media as people go into bullion dealers, etc., and they're trying to secure them, but you've got to remember as well, particularly the people in social media, the people talking about silver. I mean, these people have been waiting 15, 16 years for a rally, so you maybe just need to forgive them a little bit for getting a little bit carried away on social media. But the conspiracy theorists are ripe in silver, albeit that I do think silver is definitely going up. But when you get a rally that's essentially the best or top 2 or 3 rallies in history over a 4-month period for both those metals, at some juncture, you're going to start to see some, the thing have a breather, because it literally has not had a breather. It's just been almost a straight line every night. Probably one of the easiest trades. But look, overall, as you can see, there was bits and pieces of movement. I think overall, the regional banks or that reported on Friday night allayed concerns, and obviously Trump allayed concerns as well. We are in the third week now of this government shutdown, which is not good, and so I still think there's, the US-China trade deal isn't the only show going on here. So yeah, but now we roll into big tech. All the banks are out of the way from last week. I think the ones we're going to be watching particularly are Netflix and Tesla, because they're the first couple from the Mag 7. Got some decent ones here, like Logitech, maybe. Northrop Grumman is a big defence contractor. GE Aerospace is as well, but it's a bit of a mixed business. Same with Boeing. They've got commercial and they've got, defence contracts. ServiceNow will be a pretty important one to watch on the back of, how people are monetizing AI. I would consider like ServiceNow and say Salesforce are two companies that are really at the pointy end of the sword in terms of the actual monetization of AI and rolling it out in terms of efficiencies for bigger companies. And, I think they'll be very closely watched to see what, how much has been taken up, what company budgets are like in terms of their spend on AI, whether it backed off a little bit, etc. So I don't think there'll be any direct, flow-on effect to, the big names where we're seeing data center build, etc. Because I think that infrastructure is going to have to be built anyway. However, I think that there's merit in having a look at those two companies in terms of the health of the entire AI rollout and how much money companies and people are spending on it overall. Because if the revenue doesn't match the growth in the stocks, you do get a situation, and I'm not saying this is 2001, but this is what happened in 2001 was we extrapolated out these massive compounding annual growth rates, and then which were nearly impossible. And it wasn't the company's fault; it was the investors' fault. And that's where you sort of start to see things start to correct, etc. Is because the real world doesn't move as fast as what the investment market does quite often. Procter & Gamble will be interesting as well. We'll just get to see, increasingly we're seeing most of this healthcare sector not be anywhere near as bad as what anyone expects, and Trump's tariffs, etc., are not really affecting them. Another one that won't be affected by tariffs moving forward was NVIDIA and TSMC announced their thinnest wafer chips. The first one's coming off the production line in the US, so no tariffs. And that'll be really beneficial, I would expect, to both NVIDIA and TSMC. We're still fairly positive on those. My only concern with NVIDIA is, it's basically for it to grow 50%, it's a couple of $1 trillion in market cap. So once companies get this big, it remains difficult for them to continue to be so unbelievably dominant. See, that's and we're still not getting US government figures. So everyone was told to go home on Friday. I don't think we're going to get a resolution of this. This is the third longest shutdown in history now. So yeah, I think that's going to start to grind on the market sentiment overall, because it's going to suck anywhere. I think the last one was around about 11.5 billion. It wasn't that long ago, and it was shut down for 34 days. We're getting up there. So yeah, just a little, and just this is these credit spreads things we've been monitoring overall. As you can see, the S&P 500 performance and then the credit spread index performance. So obviously we took a little bit of a nosedive there on Friday night. That would be on the back of those regional banks showing better quality and better results. So it was at 2.1. It's now back at 1.6. So you can definitely see that sort of pan out in those credit spreads there. We'll continue to monitor this because it's very important to monitor. overall, it's just something you need to keep an eye on in the background, because when you need to know about this stuff, you really need to know about this stuff. So yeah, we'll always keep an eye on that. So couple of little comparisons here as well. I mean, debt's going through the ceiling here, but margin debt in billions. So we're over $1 trillion now. We're at 1.1 trillion in September in investor margin loan debt. So that is of concern when it spikes like this, as you can see previous spikes. And that's also what makes, what extrapolates downsides. So, you just got to be a little bit mindful. But I mean, look, you'd have a look at this October 2021, where it peaked and it started to come off. I mean, the fall really didn't happen for 6 months, because I think it was around about February, March in 2022 where we really got the big falls. And that's a little bit early too, and so is that. So I mean, look, while these numbers look alarming, and you feel like you should act now, these things can keep going. Same with the credit spreads, for instance. Michael Burry was on these. Michael Burry was doing those credit default swaps anywhere up to 3 years before they paid off. Sometimes you smell smoke, and it's only burning toast. It's not the building burning down. So you just got to be a little bit careful, because the way social media and the way Google and the way the financial press works these days is being alarmist sells, basically. And government debt now nearly at 38 trillion. Look, it's pretty out of control. We had some stability there, but as you can see, total debt, it's quite alarming overall. And we've done analysis in the past, basically, where they've got to get that under control. So look, I mean, the only thing that means is that rates are going to have to come down at some stage, and Trump's going to have to do it by any means necessary. So, you would probably expect that to continue. And but we'll just see how he does it, and whether he's actually willing to let the economy drift into the red so he can get his own way. I mean, we know that when he puts in his own Fed governor, Fed chair in the new year in May. I mean, it may happen then. So as you can see, gold down 3, silver down 6, platinum down 7.5. I think it's a bit of an over-exaggerated move, but I mean, to be honest, as you can see here, silver's still up 6 for the week, platinum's only just down, and gold's still up 5. While everything's screaming abandon ship, I think you just need to have a look at a chart that's longer than a few days, and you'll realise that this is possibly more. If it does pull back, maybe another, say, 5 to 10%, that it's potentially a buying opportunity. So so overall, look, the gold sector in Australia is going to get really belted today. I would imagine pretty hard, the gold miners particularly. But I think that might be offset by the banks being buoyed. Obviously, one very good thing here is copper didn't head lower, and iron ore was down, a small amount. So the mining sector, with those big diversified miners, are still going to probably be okay. Coal was up quite a decent amount there, but obviously lithium and uranium fell away as well. So those really hot trades have just come off a little bit, and that's the importance of trimming into strength, which we did sell some Paladin last week. We did sell some gold miners. And because, when you get these peak moves, it tends to be really severe like this. So we will we'll see what happens when the US opens tonight. I would imagine that the futures at the moment are probably fairly buoyant. And we'll just have a little double check here. Yeah, so we've got futures as it stands at the moment up another 0.5% from Friday. So that's what you really want to be doing. It will probably be fairly buoyant, but it's probably going to be mainly focused in the tech sector, maybe in the consumer discretionary sector and the banks as well, as they sort of recover a little bit of panic selling from the other Anyway, guys, have a great day and have a great week, and we'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.